I mean, the Islamic banking market today is guesstimated to be in excess of $1 trillion and is growing at a rate of around 20–25% per annum. The real challenge that Islamic banking and finance has is that the two hubs, if I may say, are the Middle East as one regional hub, and in Asia, Malaysia is the regional hub for Islamic banking and finance. And the real challenge for Islamic banking and finance today is to expand beyond its roots and be able to be offered in countries which is the European community, which includes UK, France, Germany, and the European community at large, and really into North Americas, which are the two major markets for Islamic banking and finance to spread. The challenge is that a number of these countries are secular markets, for example, Turkey, France officially, India, which is not in Europe, but it is in India. These are secular markets where Islamic banking and finance has to reposition itself and really decide how it is going to align the message, the principles, and the ethical stance and the ethical products it offers. What is Islamic banking and finance? Maybe we should ask ourselves that question. What is it all about? It's based on a set of ethical principles. It is about transparency. It's about consumer fairness. It's about a question of accountability. And it's really a question of really driving it's a question of sharing risk and returns. Whereas in the Western financial part of the world, we are talking about a supplier where risk is not shared, and here Islamic banking and finance is about profit sharing and risk sharing. So I think with these principles, which are also in a way to some extent similar to ethical finance or in other words, sustainable investments, socially responsible investing, I think that this is where Islamic finance can make a difference after the global crisis of 2008 to talk to the consumers who have lost trust in financial institutions in the Western world, to be able to come in and talk about transparency, fairness to the consumer, and articulate the value proposition that Islamic finance really has to offer. And perhaps I think that this would be important. I think it is important to get the message of what lies beneath the words Islamic banking and finance. What does Islamic banking and finance really stand for, and how can it be promoted in secular markets like Turkey, where we have 4 Islamic banks with about 5% market share in the Turkish market. In France at the moment we have a potential, and the Benelux countries, which means Belgium, Luxembourg and Netherlands, and of course the UK. Germany is another big market with over 2 million Turkish expatriates, and I think this could be another important market for it to develop. I think these markets will evolve, and Islamic banking and finance will have to adapt itself to be able to serve the secular markets. Global crisis is not quite over because there have been some other developments. I mean, the earthquake in Japan, for example, the political upheaval in the Middle East or MENA region, Middle East, North Africa. And of course, that has rattled capital markets. The oil prices have increased to nearly over $100 a barrel. And there is a lot of uncertainty which is still out there. Interest rates, on the other hand, are relatively low at the moment. Inflation is continuing to concentrate the minds of the central bankers. And I think taxes in certain countries has been raised. Islamic finance, on the other hand, if you think about it, that the infrastructure development in the MENA region, what does that mean, infrastructure development? We're talking about ports, roads, hospitals, all public sector developments. We're talking about new airports, new warehousing facilities, new cities to be built, housing as a urban housing development projects. All this is part of public sector financing and infrastructure developments, which is running into trillions of dollars. Some of this will be financed using Islamic banking and financial instruments such as Sukuk. And I think overall, that Islamic banking and finance will play an important part. I think the challenge for the sukuk market is that we need a domestic sukuk market to arise in the Middle East region. We also need to have a real estate mortgage market beyond bank lending in the Middle East. In other words, we need to have a national or regional mortgage corporation similar to a Fannie Mae, a Ginnie Mae in the United States, where we can actually be able to do business. The Middle East market, the GCC, also needs to have rules relating to a single currency, which is at the moment mooted to be the dinar. When that currency comes into play, like in Europe we have the euro, although not all countries are subscribing to the euro, I think this will all be a positive development. And what I'm saying is that infrastructure development, Islamic banking and finance will play an important part. The other part is really wealth management and protection. By protection, I mean, you know, when you have families, you're looking for life protection, disability cover, accident cover, travel insurance cover, and all these forms of pure protection products are also important in the market. Insurance as a penetration is below 1% of GDP in the MENA region, whereas in a mature market, it is close to 9%. So you can see the amount and the demographics in the MENA region are relatively young people. So there's a lot more activity in this region, I think, and overall, I think we will see a great development for Islamic banking and finance as these economies pick up steam. Trust and confidence that the financial institutions had built up has evaporated in many countries and markets. Now the real task, which is a real challenge, is to rebuild the investor confidence, whether it be an institutional investor or whether it be an individual investor, that your money, when you actually deposit money in a financial institution, is safe, that if you buy into mutual funds or you buy into products, that you will see the return that is promised, in other words, delivering on the promise, having service standards where the service is actually of a certain quality that is delivered. And I think that these are, in a way, points that financial institutions have been reflecting and realigning their business models, seeing what has been happening. A number of financial institutions dealing in the retail banking arena have got financial planners and investment advisors who have been certified either by the bank or in some cases they have to take regulatory exams before they can interface with an individual customer, which I think is a very healthy development. A number of regulators, like in the United Arab Emirates, for example, we have new draft regulations for bank assurance. We have new regulations for Islamic insurance referred to as takafful. And many other markets, we have new governing regulations. So I think overall, Islamic banking and finance does have a very good opportunity, looking at it from the other side, in terms of the opportunities that it can harvest with what's happened with the global crisis, where confidence and trust has been eroded in the Western world. And I think this could actually be a good point for Islamic banking and finance to reassert itself and to come in and regain the lost ground. At the moment, for example, we do not have a model where investors have to pay a fee to the advisors. The advisors in many cases are tied agents which are representing a single insurance company or a mutual fund manager. And I think the model to migrate to over time, both in Europe and beyond, will be that if you approach an advisor, they have an open investment architecture and they are unbiased as to how they are going to get paid, because they will charge a fee to the customer. It's a bit like a lawyer charging a fee to the client. And I think if we move to that model, then the commission is not being received by the advisor from the sale of the product from the manufacturer. And I think that that will make a big difference as we go forward, where certain countries, the advisors have to be paid a fee by the customer, and the advisor is not remunerated by the manufacturer or the supplier of the product. And I think that will be very helpful. The advisors, as we are seeing more experienced advisors, as we said, because they have to either be certified by regulators, they're taking their exams, or they actually have to be certified with, if they're working within a financial institution. And I think the investors are also being offered multi-manager products, which is not limited to only the financial institution, in-house products in other words. So we have an open architecture where we have products from different providers, and the investment advisor's job is to understand the client's investment and protection needs first, and then propose a solution to those needs, and not have a product push approach. And that, I think, is going to be the paradigm shift as we go forward as to how advisors should really behave, that they should be first listening and reacting to the customer's need, analyzing the customer's need, and then working out what is the solution, appropriate solution, based on the risk-reward appetite of the customer, and then coming up with a proper solution, and then monitoring that solution over time to ensure that, over the life cycle changes of the customer, that the set of products which have been proposed are appropriate for the customer's risk profile and his needs, because customers' needs evolve.